Dr. Babasaheb Ambedkar Open University.
Hello dear friends, welcome again in the course of Fundamental of Financial Accounting, as we are discussing today module number 20, that is trial balance. So this is a journey of the accounting where we were already understand that the initial level, how to write the accounts in the books, where to write first entry, that has to be written in the journal book. Then we are finding out some other subsidiary books in case of the transactions are in bulky. So we are preparing a subsidiary books like purchase books, sales books and etc. Then we are preparing cash books and bank books to segregate the transactions between the non-cash and cash transactions. Then at the end we were actually preparing all these entries recorded in the ledger books, that is the main book of the accounts. And at the end when we were preparing ledger books, we will just find out the balances from the ledger and then we will move to find out the trial balance. So trial balance is considered as a bridge between the ledger accounts and the financial statements. When we are preparing a financial statements, we need a basic informations for preparing a financial statements. The trial balance, it's a basic informations to provide such kind of informations to preparing a financial statements. Now I will just discuss the main important points in this particular unit. What is the trial balance, characteristics of trial balance, objectives of the trial balance, then methods for preparing a trial balance, rules of account balance, and at last illustration. So now let's start with this first important thing. What is trial balance all about? The trial balance is all about, it's actually a kind of a statement where we are find out the specific balance at the end of a stipulated time or at the end of a specific period which has been decided by the organization. So ultimately the trial balance is actually a kind of a financial statement which is actually prepared at the end of a definite accounting period. Definite accounting period, it can be considered at the end of the year or maybe at the end of 6 months or something like that. That is also depend upon the guideline and rules and regulations were actually offer you to preparing statements. So here the showing a total of the balance or the total amount, or maybe you can find out the net balance of each particular ledger account, and it will be transferred into the statement where the statement reflects all the accounts balances, debit or credit, and at the end that the balance of both the sides should be matched. If it is matched, that means there is the justification of the all accounting transactions were rightly recorded in the books of accounts with the twofold effects. Naturally, each accounting entry has a two effect, one debit and one credit with the same amount. So that is why if it is recorded properly in the books of accounts, then and then only the trial balance should be matched. But it is not mandatory that all the time the trial balance match, it means that this trial balance is right. Sometimes it is matched by mistake also. So but most probably in case of the trial balance is matched, we can take an like a step that this trial balance is matched due to the accounting entries were actually affected in the books of accounts in a right manner. Then arithmetic verification, it shows that the confirmed informations about the total of debit effects equals to total of the credit effects. So it is actually just kind of justifications kind of informations through the trial balance. All these informations were rightly recorded in the books of accounts as I mentioned earlier. Here period and procedure. Ultimately when we are actually considering an accounting entries recorded in the books of accounts, so it starts with the journal entry, then ledger posting, and then it is actually find out the balance of the specific account. At the end of the specific account, the balance will be reflected in the trial balance. So that is considered the period of the procedure, it's end of the certain procedures. Now the once the transactions actually takes place and the transactions recorded in the books of accounts, so the procedures is ends here when we prepare the trial balance. Now we want to convert the data and find out the data in a specific structure to identify the movement and this position of the statements, then we need to prepare the financial statement. But till then this actually information is here prepared, it is comes into the end. So, prepared after posting entries, the ledger and balancing all the accounts. So, once you balance the all accounts, the all accounts will close it, and then the find out the balance will be transferred into the trial balance. Then foundation of the final foundation for final accounts, as I mentioned in my introductory speech, that the trial balance, it is a bridge between the ledger accounts or transactions of the financial entries or the preparation of the financial statements. Ultimately, this trial balance is actually a basic information for preparing of financial statements. So, that is why it is considered a bridge between the ledger accounts and the final statements. Now, characteristics of trial balance. Characteristics of trial balance, first is definite period date. Why it is a definite period date? Because of this trial balance is preparing at the end of the specific date. As I mentioned, maybe if it is required on a quarterly basis, so then it has to be decided at the end of every quarter on which date the balances should be closed. So, all the ledger accounts will be closed, find out the balance and then prepare the trial balance at the end of each quarter. Suppose if it is required at the end of every 6 months, then at the end of 6 months all accounts needs to be closed down, find out the balances and prepare the trial balance. Generally, all these ledger accounts close down at the end of the year, and at the end of the year when we preparing the balances and transfer into the statement, and that actually shows the specific balance at the end of the year, which is actually find out your financial position at the end of the year. So, that is why it is considered the definite and date. Statement, not account, it is clearly a statement. Trial balance is considered as a statement, it is not an account, because of you transfer all the accounts balances into the specific statement, which is actually helpful to create the financial position statements. So, that is why it is considered as a working statement compiled from the ledger accounts and the total and balances rather than the formal accounting ledger or book itself. So, ultimately from the ledger book you will find out the closing balances from each account and transfer into this balance. So, at least able to know that the how many accounts is having a balance, and that balances will be showing a financial position of your business. Then link to the final account, as again it is why it is considered as a link to the final account, because of it is an act to take a further action of the balances for finding out the actual position of the business on a specific date. So, that is why it is considered as an intermediate, act as an intermediate link between the daily transactions and the final position. Why you consider it a link between the daily transactions and final position? Because of the trial balance is actually the position of the transactions takes place on a daily basis, and what was an outcome of the daily basis transactions, the trial balance is reflected or a picture or a mirror of that particular position. After that, we need to find out the position at the end of the specific date or at the end of the business or at the end of the year. What is the final position of the business? That is reflecting through the analysis of trial balance, which is actually considered a final statements. That is why it is a link between the ledger accounts and the final statements or the final accounting statements. Moving to the next point, key objectives. First is check arithmetical accuracy. Check arithmetical accuracy, why? Because of we need to verify the debit and credit entries. As I told you, the trial balance is match. It means that 99.99% it justify that the transactions which are actually recorded in the books of accounts, most probably it is rightly recorded. Why? Because of the trial balance is match, debit and credit both are same, correct. So, that is why we assume that this generally the transactions which were actually recorded in the journal book or maybe posted into the ledger book, both are accurately done. So, this is a check of arithmetical accuracy, and that is why the balance are accurate. The next is locate and rectify errors, correct. Suppose if the trial balance is not match, then you have to find out where is the mistake is actually happened, and according to that maybe you can identify, because of if any accounts were actually not tallied. So, in that sense the account has some mistakes, or maybe if the trial balance is not matched, then we need to rectify all the transactions, audit once again and match the transactions where the actually mistakes has happened, and on the basis of the correction and rectify the mistakes, then we need to correction can be happen. So, helps account detect and mismatch early and fix entry in case of happened in the any particular posting or maybe in the journal entries. Internal controls, naturally keep indirect oversight over employees to ensure the regular posting and prevent the fraud. Generally, if it is kind of actually a habit or maybe the policy to be designed by the organization, that once the transactions is actually takes place, it must be recorded in the journal book or a subsidiary book, that is mandatory. Then every fortnight all these transactions were actually written in the journal book or in a subsidiary book has to be posted into the ledger book. So, if it is actually a formula or if it is a kind of a decision has been taken by the organization, so regular entry has been posted into the ledger book, then easily you can find out if there is any mismatch or maybe any kind of fraud is happened, you can easily identified and then rectified also. Then streamline a finalization, provide a structured account data necessary for a quick preparations of the final accounts. The quick preparations of the final accounts, because of see we are talking about the sole proprietorship and partnership, definitely they might prepare all this information at the end of the year only. But in case of a corporates companies, generally they are actually required all this data on a quarterly basis also, and sometimes they need actually informations and financial position at the end of 6 months also. So, in that case if you are recording all these transactions properly in the ledger book and prepare the balances of each account on a regular interval, then this particular information and structure information is required. Why? Because of this informations will helping out you to prepare your financial statement also at any particular date or any particular time. So, it helps to prepare the financial statements very frequently or maybe immediately. This trial balance or maybe the ledger book will helping you to prepare the statements very quick. Then next point is methods of preparation, how this actually there are two methods to prepare this trial balance. The one is at the end of the ledger posting done, and from the ledger book you can write the total of debit and credit both into the statements in the trial balance. Like suppose if the example Manoj account is actually showing a debit total is 15,000 and the credit total is 18,000, both balances will be write down in the trial balance and write the in front of Manoj account debit side 15,000 and credit side 18,000. Suppose in case of the plant and machinery, the total of the debit showing is 5 lakh and the total of the credit balance is showing it's 1 lakh. Both the balances will be transferred into the trial balance account, total on the debit side 5 lakh and credit side 1 lakh. Definitely it is actually creating some chaotic situation. Why? Because of we are writing both the balances into the trial balance instead of the net balance transfer into the trial balance. So, sometimes what happened that the total of the debit and credit were actually showing the valuation of the transactions takes place in the ledger account also. So, that is the one method, as it is first is the method of the total that prepared by taking the grand total of each side and that each side of individual account of each account, and that has to be recorded in the trial balance. So, equal totals in case of the total is matched both the side, debit and credit total are same, then you do not need to write this account into the trial balance because of the total is tallied. So, then you do not need to require, but in case of the total is having surplus, any one side is actually surplus or deficit, then both the balances will be write down in the trial balance. Grand totals of both the sides match, it arithmetic equally across all the debit and credit entries made. Useful verifying that row ledger entry volumes across both the sides. But ultimately this method it shows that the balance of the each side has to be written into the trial balance, and then at the end we will have to find out the trial balance whether tallied or not. The second method is we, instead of the writing both the side balance into the trial balance, we will close the ledger account, find out the balance of the each account, which side its balances actually shows. So, we will have to close this account in the ledger account, ledger book itself only, make a total of debit side and credit side. Wherever it is actually surplus, the other side has to be written the balance carry forward. So, that shows that if the debit side is higher than the credit side, it shows the debit balance. If the credit side is higher than the debit side, it shows the credit balance. So, in that way, the extracting only the net balances from the each account, and that difference amount of the each account only will be transferred into the trial balance. But which side it will be written? It is very simple. If the debit is higher, it will be written on the debit side, it is considered as a debit balance. If it is the credit side is higher, it consider a credit balance, write down in the credit side. So, the most widely used this method generally, and it in practice also, if you are going to see, the most of the businessmen, organizations and companies are actually using this method to close the accounts in the ledger book itself only, find out the closing balance, and the closing balance only will be transferred. It is a clean summary of the net assets, liabilities, expenses, incomes, and etc. So, all these informations you will properly get it the ledger accounts. This method is more suitable. Now, rules for account balances. It is not a rules actually, but I just want to tell you the few basic standard. The standard, it means the certain accounts have a certain balances only. It means that the capital always credit, because of the capital actually brought by the owner in the business, capital account always the credit balance. Most probably capital account negative balance should not be happen, because of we brought the capital in the business, so it is always credit balance. Drawings is always debit balance. Machineries, assets, always debit balance, because of the machineries are assets. So, plant and machinery, land, building, furniture, equipments, vehicle, etc. all are actually using in the organizations, and these assets is actually helping to doing a business. So, that is why the all assets are always a debit balance. All expenses are always actually a debit. Rather, it is salary, it is an expense, it is debit, rent is an expense, it is debit. So, most of the real account expenses, it is always debit. Reverse, all incomes, if you received a dividend and interest income and commission received and etc., all incomes always a credit balance. So, these are it's a rules, by it's a considered a rules, because of it is always happen in that way only, right. Suppose in case of a personal account, the personal account which are the debit balance by nature. The drawings, as I mentioned, it is always debit, because of the drawings is actually withdrawing the cash or withdrawing the goods from the business. So, capital has to be deducted, capital has to be reduced. So, that is why it is considered the drawings, and drawings account is always debit. Debtors, debtors means when you sold the goods to the any particular party on a credit basis, then the person who is actually purchasing a goods from us, they are a debtors for us, and debtors are our current assets. So, debtors are always debit. Any amount offered to the employee or a customer or any people in advance, the loan given to the person, that means it is actually receivable from them, that is why it is our assets. So, loans accounts is also debit. Reverse, the capital means the person who is investing in the business, always consider a credit, because of the capital is actually invested by the owner. So, that is why always credit. Creditors, from the person we are buying a goods on a credit basis, that means we owe to that particular person, it means it is our liability, and our liability is considered a creditors. In case of any loans taken from the institutions or maybe individuals or banks or anybody, ultimately we have to pay this outstanding liabilities or liabilities to them. So, it is our debt. The liabilities, that means it is all the loan from the HDFC bank. So, HDFC bank's loan is always considered a credit balance. Now, moving to the next part, real account. Real account, it is also considered stock. Stock always debit, because of when we consider the stock is actually kept in the business. It is in your assets. The stock, or you can consider a purchase account, it is always debit. Sales return is always debit. Why it is debit? Because of, see, purchase, the goods comes in, stock increase, that is why debit. Sales return, that the goods actually when we sold the goods it goes out, so stock reduce, but the goods were actually returned back to us which was sold earlier, so that goods comes in, so stock increase, so sales return account is debit. So that is the possibility. All assets account debit, as I mentioned, whether it is a tangible assets or an intangible assets, all assets accounts are debit, whether it is current assets, fixed assets or investments, anything always debit. Now in case of real account, the stock, if stock is negative, in case of the goods goes out, sales, the stock reduce, the sales account is credit. Purchase return, when we purchase the goods, stock increase, but the same goods were returned back to the vendor due to the certain reason, the purchase return account also consider a credit because of goods goes out, right. So that's outflow of the goods and other things, these are considered as a part of the credit information. Nominal, as I mentioned, all expenses always debit and all incomes are always credit. So these are the establishing things of the transactions consider at the time of preparing a trial balance, because by nature these transactions were actually recorded in these books of accounts. Now here this is an example for you how these balances were actually recorded in the trial balance. I think the previous slide will definitely helping out you to understand these accounts will be recorded here, or anyway because of you know very well how to write the journal entries, how it will be posted into the ledger accounts, then how it will be preparing all this. So by nature you know that whether it is debit or credit, you can easily record these transactions, this particular balances into the trial balance, correct. Now following balances have been taken from the books of Sri Anil on this date, and they asked to prepare the trial balance. So title of this, the trial balance of Sri Anil as on 31st March 2026. Trial balance is always prepared on a specific date, so that's why it's written as on. It cannot be written at the end of the year. Why as on? Because of it is preparing on the date. So this trial balance is reflect on 31st March 2026. This is the balance of this date, that's why it is written as on, correct. Now see, first before we are going to transfer directly this, just try to understand the nature of that particular balance as we discussed in the previous slide. Capital, as I told you, capital we brought into the business, so it's always credit. Drawings, we actually withdrawn the goods or cash from the business, so the drawings should be debit. Cash is always debit because of it's an assets, correct. Cash is always debit because of cash actually always it should be a balance only, cash cannot be a negative, so that's why it's debit. Bank can be both, bank can be overdraft also and bank can be balance also. But I want to tell you, in case of if it is written only bank here, if it is not written overdraft, then bank balance is considered a debit. If it is written bank overdraft, then it's credit. Machinery, as I told you, assets always debit. Opening stock always debit. Purchase debit. Sales credit. Purchase because of goods comes in, goods increase, stock increase, that's why debit. Sales, goods goes out, that's why it's credit. Purchase return, that is credit because of ultimately when we purchase the goods it's increase, but when purchase return is happened, that goods goes out, so that's why it's credit. Sales return, it's debit. Why? Because of again the sales return it's considered the part of the goods. Sales return says goods goes out, but sales return gets goods comes in, so that's why it's debit. Interest received, it's an income, that's why it's credit. Telephone expense, all expenses are always debit. Salary debit. Debtors, that means goods sold on credit, so we are receiving the amounts from our party, ultimately it is our assets, so that's why it's considered debit. Creditors, the someone is actually asked the amount from you, that's your liability, that's why it's credit. Goods destroyed by fire, it's credit because of ultimately the goods goes out. Investment is always debit. Discount received, it's your income, credit. Discount allowed, it's your expense, debit. Carriage, debit. Loss by fire, debit. See, carriage is an expense, loss by fire it's your loss, that's why it's debit. Rent is your expense, debit. Furniture, it's your assets, debit. Stationery expense is your expense, debit. Dividend most probably income only. Generally we are not considering here the dividend paid. So dividend is always income, so that's why it's credit. Loan borrow, it's credit because of it's your liability. Advertisement expenses, it's an expense, it's debit. Interest on investments, it's your income, it's always credit. So this is the brief summary which we are actually already prepared here. Now we just have to put these things in the statement. How you can prepare the trial balance? This is a T shape of trial balance, generally in the statement format. The 4 columns, particulars, that is name of account, then the ledger folio number, because of from which particular ledger page this balances has been transferred here, then the debit balance rupees and the credit balance rupees. Start with this first item, capital. As I written, it's credit, so capital, it is written on the credit side, amount is 85,000. Drawings, it's debit, so drawings written on the debit side, 4,500. Cash 2,000, it's written debit, so 2,000 rupees debit. So this is the way to record all these balances here in the debit and credit side. If you are going to see either one by one, bank is written on the debit side because of the bank balance is debit, correct? Then the machinery, it's an assets, debit. Opening stock, the stock is debit. Purchases, it's debit because of the stock increasing. Sales, because of the goods goes out, it's credit. Purchase return, the goods goes out, that's why it's credit. Sales return, its goods comes in, that's why it's debit. Interest received, it's income, that's why it is credit. Then the telephone expenses, expense, debit. Salary expense, debit. Debtors, the amount is actually receivable from our party, it's your assets, debit. Creditors, it's your liability, credit. Goods destroyed by fire, it's considered credit because of the goods goes out, correct? Investments, it's your assets, debit. Discount received, it's your income, credit. But discount allowed, it's your expense, it is debit. So this is the way. Carriage, it's an expense, debit. Loss by fire, expense, debit. Then rent is an expense. So these are the expenses, that's why it's debit. And this is your assets, furniture, it's assets, so assets always debit. Stationery expense, again it's an expense, that's why debit. Dividend is your income, that's why it is credit. And loan borrowed, you borrowed the loan, that means it's your liability, it's your debt, so that's why it's credit. And the remaining 2 items, one is advertisement, that is your expense, that's why debit. And interest on investment, it's your income, that's why it's credit. Now important part. After this balance is written in the format, we just make a total of both the side and see the total of both the side is equal. 1,91,300, it's debit and credit is match. So that I told you in the initial part of the lecture that in case of the total is matched with the debit and credit, most probably the trial balance is right and it is tallied. So entries of transactions and posting both are 99.99% is right. It happens maybe in very rare cases, in case of this matched, maybe some mistakes can be happen, but it's very rare. Otherwise this transactions is tallied. So that trial balance is actually a picture of the information of the journal entries and ledger postings were actually done perfectly, and that's why this your trial balance is match. We have another example also that you can actually do it by the understanding, but simultaneously with me if you just try to understand to by yourself also. Here the capital account, as we have a practice, capital as I mentioned it's always credit, drawings it is debit, bank charges it's an expense, debit, purchase goods comes in, debit, sales goods goes out, credit, cash balance always debit, debtors it's your assets, debit, creditors it's your liability, credit, bills payable it's your liability because of those actually from the creditors it's converted into a bills payable, so that's why it's credit. Bills receivable it's your assets, debit. Rent paid, so that's your expense, debit. General reserve always created from the profit. So reserve, it means the amount of profit which we are actually kept aside for a future any contingent liability or future any kind of development and growth, the amount of reserve can be utilized for the same. So it is your undistributed profit which is to be considered as a credit. Bank overdraft liability, credit. Discount allowed it's an expense, debit. Computer it's your assets, debit. Goodwill it's your assets, debit. Salary, stationery, commission, these are the expenses, so it's debit. Discount received, it's income, credit. Carriage inward, it's an expense, that's why it's debit. Investments, it's your investment, it's your assets, that's why it's debit. Bad debt reserve, again bad debt reserve, it's a reserve created against your doubtful debts, but it's created from the profit, that's why bad debt reserve is considered a credit. Interest on bank overdraft, it's an expense, debit. Insurance premium, it's debit. Rent received is your income, rent paid, it's your expense, so rent received is credit. Advertisement expense, donation, both are expense, debit. Dividend is not mentioned here, so we consider as an income, credit. Provident fund, it's your actually provident fund is your liability, so that is credit. Bank loan, it's liability, credit. So in this is the way it can be written. Now this is the another format, it's a statement format, right? Now here it's an account format. T-shape, it's a kind of a statement format. This is an account format, debit amount, credit amount. So in this way, all the credit balance will be written on this side and all the debit balances will be written on this side, and at the end we'll just try to make a total of both the side. If it is match, it means that your trial balance, journal entries and ledger postings are perfectly done. As maybe 1% can be possible, that amount can be written or it might be written wrongly, but that is very rare case. Otherwise, most probably all the transactions were recorded rightly in the books of accounts. So this is your trial balance. This is a bridge between the ledger accounts and the final statements of the accounts. From now this lecture onwards, we are preparing a finance statements or a financial statements of the particular sole proprietorship. You need to do a practice more to understand this particular unit properly, then we'll move further in the next units. Thank you so much.